This is Rivian on the monthly chart, and it's safe to say price is bottom near the $10 level, but that's a far cry from where price got to. We're talking $180 in November of 2021, down to a low of roughly $10. Now, going to the daily chart, you have this rally in price at the price broke this resistance support level at $15, went as high as $27, $28, where it hit resistance due to what was support. But on the way up, it did form a daily bias level. Got this rally, base rally. Price hits resistance. Nice pullback. So this is the pullback, not the impulse. This was the impulse move higher. Now, definitely the buyers are defending this level with all their might. It held not once, but twice. Price now finds itself at a level where it needs to move higher. It really needs to close above current levels. Again, support, resistance right now. But really the question is, if you're a long-term investor or have a longer term perspective, is where's price going to be in 5 years? More so price, where's the company going to be? Because price is going to follow where the company is going to be down the road. So I'm glad you asked. This is coming from Motley Fool. Where will Rivian stock be in 5 years? So the market has not been kind to Rivian's stockholders. Shares in the EV maker have lost a whopping 80%. Like I said, we went from 180 down to about $12 before current levels of $26 or so of their value, as concerns over cash burn and lackluster growth mounted. That said, there could be light at the end of the tunnel. Again, this was way overvalued. At the time, they wasn't producing anything. Now, it appears like I see a Rivian pickup truck at least once every 2 weeks now. So founded in 2009 and debuting on the public markets in 2021, Rivian is an EV company focused on trucks, SUVs, and crossover segments. Company earned an initial valuation of over 100 billion, netting it roughly 12 billion in cash to fund its expansion. But despite the promising start, Rivian's valuation has since fallen to just 19.5 billion due to operational delays and macro challenges, in particular interest rates, which has increased the cost for every business that's out there. The EV industry is under pressure from rising rates. Okay, there you go. Rising rates, which hurts consumer spending. Cars are big ticket items usually purchased with loans, and higher rates make them more expensive. To cope with the softened demand, EV makers have engaged in a price war, putting even more pressure on unprofitable players like Rivian. So we've seen this past year. The year's not over. We're in month 10. Tesla has lowered their prices on some of their models 7 times, 8 times. But while industry challenges have dampened appetite for Rivian stock, they have stopped the company from enjoying massive growth. They have not stopped the company from massive growth. So let's talk about their previous quarter. They had earnings indicate that it would be heading over the long run. Rivian revenue soared by 208% year over year to 1.12 billion as the automaker increased vehicle deliveries by 59% to a little over 12,000 vehicles. Rivian's operations are scaling rapidly, and management expects full year production of 52,000 cars in 2023. Management is also hinting towards releasing smaller and more affordable options, sort of like what Tesla did with its Model 3, which could help Rivian penetrate new markets in Europe where consumers often prefer more compact options. Yeah, because in Europe they run on diesel, and diesel is a lot more expensive than gasoline in the U.S. Rivian generated a second quarter operating loss of 1.29 billion, a sharp improvement from the 1.7 billion loss in the previous year, Q2. So, again, this is an example of economy of scales, although Rivian is not there yet. And with 11.6 billion in cash and equivalents on its balance sheet, the company can sustain operations without over relying on debt or equity dilution. This is key, as we've seen a bunch of these EV startups having to go back to the public markets and then back again to sell shares, to raise funds, to fund their operations. Management expects a positive gross margin by the second half of 2024, which could be the first step in eventual net income profitability. Now, from a valuation standpoint, price to sales multiple is 6.42. That's a sharp discount relative to Tesla, which has a 9.06 times sales. But again, Tesla is not a car company; they're a tech company, and one of their bread and butters in the future is going to be their energy division. Rivian's low valuation, spectacular growth rates, and pathway to profitability make it likely to reward investors over the next 5 years. Okay, so where can price go, or where will price be over the next 5 years? Well, I'm going to say that price is going to be above $40. That is really, from a macro standpoint, the first major higher time frame level that price will have to contend with. Now, how high can price go? You take out the $40 level in the coming 12 to 18 months. Your next level of resistance, huge resistance, is going to come in at $64. You can't ignore this pivot high at $56, but this is really the next major level. And then where can you go from there? You're probably looking in the $95 level. Can price take out its all-time high in 5 years? Well, that's too far of a horizon, because price is at $25 now. Again, next levels as targets, it's going to be $27, $40, and then $65. I can see $65 being taken out in 5 years' time or prior to that. Again, look at the daily buyers level at $20 serving as the line in the sand for price. Thanks for watching. Subscribe. Please like the video.